Good morning, everybody. Welcome to today's 1Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we do these free mentoring roundtables every week. This is the 492nd session. So somewhere in the middle of this pandemic, we're going to cross a major milestone of 500 sessions of these free mentoring roundtables. We started way back in 2008 as an experiment, and then from that experiment, it led us to the full-blown 1Million by 1 Million Global Virtual Accelerator, which we launched in 2010. So it's been a decade that we've been doing this, and it's been quite a popular program. Just these roundtables have had over 150,000 attendees. So you can imagine the footprint of the entire program is over 500,000. The event is being recorded. This and every single other roundtable recording can be found on our YouTube channel, 1M1M Roundtables. On Twitter, we're at 1M by 1M and at Stromana. You can follow either account, and we publish a lot of interesting content. Today, if you're live tweeting, use hashtag 1M1M. Now, this is a roundtable, not a broadcast. So we do have scheduled programming in the first part of the session, but we do want you to participate as much as you would like to. So these are the call-in numbers. I'll put the slide back up a little bit later. We will start today's session with Raoul Maier, founder and managing partner of Eudemian Ventures. Raoul, welcome to the show.
Thanks for having me, and congratulations on the great success and mission with 1 Million by 1 Million.
Thank you. So Raoul, let's get acquainted. Let's get you introduced to our audience. Tell us a bit about your background as well as about the fund.
So on my background, 3 prior lives before venture capital. I started very early in venture capital during the crazy .com boom there in the late 90s. I was quite young at that time, and was able to raise a small fund in Europe at that time. And we thought we were smart, and invested in some European and US startups at that time. But then obviously ran into the .com crash, which was a quite formative experience for me. Had to rebuild, and was impossible to raise a larger fund at that time, so became an entrepreneur. Built a real estate business back here in Europe, which we were able to exit on 5 years ago. And parallel was with one of the large management consulting firms before founding Eudemian Ventures in 2018. So we're a Silicon Valley-based seed fund, and we invest in North American software startups. So we are really software generalists, could say bits of atoms, basically. And there are a few things we would not do within digital. So we'd not do blockchain, would not do crypto, not do gaming. But other than that, really both consumer and enterprise is in scope for us. And we're very specific with the stage focus because we focus on the post-seed stage. So really anything between a seed round and a Series A round is where we focus on.
Okay. Now, how do you define post-seed? And what I'm specifically looking for is what kind of validation are you looking for? Are you looking for a particular revenue level? If you're investing in SaaS, are you looking for a particular MRR threshold? Are you looking, if it's B2C, are you looking for a certain, number of users? How do you define post-seed?
Yeah, so I'll come to the metrics in a moment. So the very easy explanation for us is really if somebody has already raised a seed round from reputable investors but hasn't raised an A round yet, that would be the simple definition of what we define as post-seed. Also from a higher level, you could say anything that has achieved product market fit to a large degree, we qualify as post-seed. And coming back to your specific question on metrics, it really depends on the type of business. So if it's a SaaS business, typically look for $1 million ARR. If it's a consumer business, usually 20,000 daily active users is a threshold that we like to see. And if it's more like e-commerce or marketplaces, usually 5 million GMV is a good threshold for us.
Okay, got it. All right. So, and you're looking for North America companies, or are you looking for? Yeah.
Yes.
So talk about geography a bit.
Mm-hmm. Yeah, we are a bit special, I would say, among, I would say almost, you could say, the universe of US seed funds in general, but specifically in Silicon Valley, because we are building a transatlantic firm, and we have been doing so from day one, but not in the sense that we would invest on both sides of the Atlantic, but more having a clear investment focus in North America, and later helping these startups scale into Europe, which we think is a must-have market as soon as you typically reach Series B level. And we like to, be as helpful as possible in preparing the US startups for that step.
Very good. All right. And what about fund size and check sizes? What's the fund size? What kind of check sizes are you writing?
Yeah, I can't talk about the specific fund size because our fund is still not closed, so it's basically changing all the time. But in terms of check size, we are writing checks of up to $250K as an initial check and up to $1 million total, including follow-on. So typical seed fund size, not very typical for post-seed phases, because we usually are a follow-up fund to larger, early stage funds that we partner with that bring us in as a value-add partner, or we bring them in if the lead is not yet in place. So that's our strategy.
Okay. And just to be clear, your post-seed strategy is on a new term sheet on a new valuation, right? You're not putting $250K on the same terms as the seed. No,
exactly. The former.
Right. Okay. All right. Let's do some examples of what you have invested in. And as you were talking about some of your investments, talk about when you encountered them, what was the situation in the company, what drew you to this company, how did you find them, and what is it about them that made you write the check?
So, well, let me just maybe start with an overview of our portfolio right now. I mean, we started investing about a year ago. I mean, we are a fairly new fund, and we have done 6 investments so far. And there's a pretty common thread across those on how we, came across them and what we liked about them. But let me first introduce you to our portfolio and tell a little bit more about what those companies are. So one company we invested in is called Grin, and they're building they're actually the leading influencer marketing tool in the market today. And they are solving a very, very complex problem of basically having millions of SMB type businesses trying to reach hundreds of millions, if not billions of consumers using between 10 and 20 million influencers and micro-influencers. And it's a very, very complex, ecosystem, and they're, basically solving that both from a sourcing, but also from an operations point of view. And we really love that business because we really believe in that market. And there are some other reasons related to management why we really love that one. Another one we invested in is called Underground Cellar.
Before we move on to the next one, what stage, what did they have when they come to you, and why did they come to you? What was the situation?
So usually the way we source, maybe let me start with that, is really, because we're a new fund and we need to, we first need to establish a type of top tier brand that those types of what we consider future unicorn founders reach out to us first. So the way we source at this stage is really via our trusted networks of other VC funds. And also, via introductions of some, strong angels in the ecosystem who really introduce us to those deals. So that's how we source at this point. And so in this case, Grim, there was already a term sheet in place by a large fund called Bullpen Capital. They are the leader, in the post-seed stage today. And so we have a pretty similar thesis. except for the fund size differences. And so that's how we got introduced there.
Okay. All right. So please go ahead to the next one.
The next one is called Underground Cellar, and they are revolutionizing the way brands sell online, which is a fascinating concept because they really think that discounting should be a thing of the past, and instead they are switching to upgrades. So they think that there are so many items discounted these days with full price transparency on the internet that that's really a race to the bottom that can't be, sustained for many businesses. And so what they introduced is really a gamified solution for never providing a discount, but instead giving random upgrades. And they started in the wine business. And so you imagine that, usually you would shop for a great price, but instead in this case, you say, hey, I would like these 2 or 3 bottles. You get them at list price, but then you get one random upgrade and it might be a $5,000 bottle of Chateau Lafite or something like that, which is really exciting to many people. And they think they can transfer that to many different markets like ticketing once we are post-pandemic again, and other areas, which we think is an exciting new concept. Another company we invested into is called Resolve. They are a spin out of Affirm, the B2C payment transactions company. And they are basically providing instant credit between 30 and 90 days to SMB buyers. And we really think that they can revolutionize the way instant credit is provided, because today it's a very laborious, difficult process where you have to involve banks, and it's just not a very smooth process today, and they're solving that. Cereal Box is another investment we did, and they are basically building the Netflix for reading and listening. So they are really transforming award-winning content and bringing it to you in a format where you can really read it and listen to it in a seamless way and switch between the 2 modes. It's basically, what you're used to in visual with Netflix, they bring that to the other senses, which we think is a very exciting concept. 5th company we invested into is called AdQuick, and they are revolutionizing the outdoor advertising space. So basically, they're building the leading marketplace for anyone who wants to buy advertising outdoors, to make it as easy a process as you buy ads today online with Facebook or with Google. So when you imagine you have millions of advertising site owners today, billboards and other outdoor advertising opportunities, these are very, very hard to access. And they are basically building the leading marketplace for that, which we think is an extremely exciting business. Certainly post-pandemic, but even within the pandemic, it's going well. And the last company we invested into recently is called Tiny Care, and they are building the 21st century brand for childcare. And we love that business particularly. I mean, I'm a father of 2 little kids, and we really think that the childcare experience, particularly in the US, is pretty broken, both from a demand and a supply perspective. So the demand side, obviously, you can't get enough childcare capacity, you don't get the quality you like. And from the supply perspective, it's also hard because many of these childcare providers have a hard time really finding affordable rent, particularly in downtown locations. And Tiny Care is really solving both problems, and we really love that business as well. So that's kind of the businesses we invested into. Pretty exciting businesses, and the common thread across all of them is that they were what we consider either full product market fit or very close to product market fit, typically in a valuation range between 15 and 25 million pre-valuations, with a really, you could say, a breakout growth pattern. And that's always what you would like to, catch, and we really focus on those types of businesses.
Interesting. The valuation numbers you're quoting are Series A, Series B numbers, right? And it's interesting that you're not now experiencing these valuations in post-seed.
Are you referring to like 5 or 10 years ago when you say Series A or Series B numbers?
Well, that's what I'm saying, that traditionally those are numbers that we have seen. Yes, recently we've been seeing these numbers in earlier stages, but that's the trend that we are seeing everywhere. You know, the ecosystem is fragmented tremendously, and the series sizes have gone up tremendously,
Exactly.
even in the early stages. So, yeah.
And I think you're touching upon a very interesting point, Ramana, there, because one of the main reasons why we chose the post-seed stage as core to our thesis is really, a few big trends that have happened in the venture industry over the past 5 to 10 years. And one is certainly that the A round has kept creeping up and up, further and further. And you have seen a massive fragmentation of the seed stage funding market, right? Starting with seed 10 years ago, and then it broke into pre-seed and now into post-seed. And so you suddenly have a totally different funding environment. But we believe that the post-seed stage is a very attractive one. Even if the valuations seem high compared to 5 to 10 years ago, you get very mature businesses at that stage with a much, with a very different risk pattern from pre-seed or seed investments, obviously, and we think that's a very attractive space to play in.
Yeah. Now, what have you seen in the last 3 months? What are the changes? What are the dynamics? What are the trends? What are you seeing in the deal flow? What's happening in your portfolio? Can you summarize a bit of the disruption era situation?
So I would say from a founder perspective, from a founder perspective who is currently out raising, I really see 3 types of founders being in the market today. One is a founder who is either COVID neutral, I would call it, or COVID benefiting, right? So those are founders that raise right now. The other ones would be what I call super founders or stellar founders who can raise at any time. And the third one are really the ones who are desperate to raise right now because of the tough pandemic situation. I think that's the type of founders that I see raise right now. And obviously you want to identify who falls into which bucket, because the classic let's say typical types of businesses I think have avoided to raise over the past 3 months until we get more stability and more clarity on the situation. I think that has been a big shift I've seen over recent weeks and I would say 2 to 3 months.
And have you seen deal flow that's of the other 2 kinds, where people have COVID neutral businesses or COVID benefited businesses that are coming through?
Yeah, so I think when I look at our most recent deal, for example, right? So for example, TinyCare is a really good example for that. I think TinyCare falls into bucket 2 because you could argue that TinyCare or childcare is impacted by COVID, and it's unclear whether it's actually benefiting from it or neutral. So it's not an easy pitch to make. But in this case, the founder was so strong that even in such an environment, he could very easily find very high quality investors, and we supported that because of the quality of the founder.
And what is the background of the founder that makes him so high quality?
So he was a senior leader at Minerva project before, and he had a very, very strong leadership background and also had a very strong founder product fit. So he has been working also in the childcare space for a long time, and he has been able to also demonstrate that he can very quickly build a very high quality leadership and advisory team, which are really great indications of somebody who can build a sizable business, and we were very impressed by that.
Okay. And where are you based normally? You're currently in Austria, but are you normally in the Bay?
Right now I'm in Austria, where I'm originally from, but usually we live in the Bay Area, in Belmont, which is really between San Mateo and Rivers. Yeah.
Okay. And what is it seems like there's something intriguing about the name of your venture capital fund. What is What is the story?
Yeah, so Eudemian Ventures, it really goes back to an ancient Greek concept that was originally developed by Plato and Aristotle, and it's called Eudaimonia. I don't know if you're familiar with that.
No.
And the concept of eudaimonia we found is really fascinating because about 2,500 years ago, these two great philosophers really asked a pretty fundamental question of what makes for a meaningful and impactful life. And their answer was remarkably simple. They thought that it's really about making your potential actual. So it's about realization of potential, and that's the concept behind eudaimonia. Actualizing potential, and we love that concept because obviously it goes for humans. It also goes for technology, right? Because a technology that has potential that's not actualized is really worthless. And when you think about the combination of the two, the human and technology coming together in a startup trying to make a large and meaningful impact in the world, then it goes for that, very much as well, because of, startup ideas or startup potential are totally worthless, as we know. It's all about the execution. And so the combination of those we felt is a really good philosophy to have, the firm revolve around. And it's really our mission to make potential actual, and you will actually find it as our slogan on the first page of our website as well for that reason.
Very nice. Raul, it's a pleasure. Very nice to meet you, and one of these days we'll meet in person after all this craziness is over.
I very much hope so.
Thank you for coming.
Absolutely. It was a huge pleasure. All the best. Stay safe.
Folks, we're going to switch to the entrepreneur pitch section of the presentation today. Just want to set a little bit of expectations, not only for today's pitches, but also for people who are looking at the session today and thinking about pitching at a follow-on session. Remember, this is a safe working session. We have absolutely no other agenda other than helping you strategize on your path forward. So we are on your side, fair and square. You might disagree with my feedback today. That's okay. It's your venture. You will make decisions. All I ask is you listen to the feedback you get and then process the feedback and, make decisions that take into account how you tackle that feedback. Remember, not all businesses can raise money. Not all businesses should raise money, and raising money doesn't guarantee success. Sinjini Sengupta, you're the presenter today, actually. We only have one presentation and then open Q&A. Go on.
Yeah, hi, Shramona.
Go ahead.
Hi,
yes,
Shramona.
We can
hear you. Me?
Yes, we can hear you.
Yeah, right. Thank you so much. This really is a lovely opportunity, and I'm so glad to meet you, even though virtually. So I hope you're doing very well.
We're doing all right so far.
We too are just about managing. Hang on, maybe.
Yes.
Yeah.
Indeed.
So yeah.
So tell us, what are you working on?
Right. So basically, I have a very different background, as if you have got a chance to, figure out from the slides. I come from a very different background of having studying economics from ISI and thereafter having been an actuary for 12 years. I took a swerve 5 years back out of a professional burnout, and then I started to, work with the pen and the stage, and somehow things, totally took a different destiny on its own. I am right now trying to bring in my work of 5 years together. So I work in the space where I want to bring out, self-actualization. Right now, when you were speaking with the, with the guest, and you mentioned this term, self-actualization. I have been on my journey of self-actualization so long, and I want to offer that to my client base and customers and audience and readers. So how I'm going to do that is I have been a public speaker and a columnist, writing and speaking in the area of gender sensitivity and emotional wellness. And I also wrote a book on, urban living and loneliness and transformation through self-actualization. I have also been partner and part of several collaborative art forms, theaters to films, etc., written scripts, etc. What I am now looking at is to be able to give the taste of that higher sense of purpose and that higher sense of articulation, exploration, and fulfillment to other people who would be interested. So essentially, I am looking to skill build, number one, by helping people to learn the skills of public speaking and creative writing, because through them you just not express but also get a better sense of yourself and exploratively deal with what might not be a question we often ask in the conundrum of our daily life. So I want to offer skill building sessions, which is going to be my MVP, which is basic 4 to 6 weeks of public speaking workshops and creative writing workshops. I have been doing that a lot based on invitation, giving master classes and working with children, group of individuals, even corporate. I have done that, but many of them were on either collaboration pro bono or on invitation. So I really did not kind of commercialize or productize my offerings. I was more on a pursuit and passion based spree. The second way in which I see this work is the immediate second phase of my offering, where I would go into change making. But essentially, I believe that public speaking, creative writing, or any art for that matter, are essentially means to an end. They cannot be an end to itself. So the big why can only come through some kind of higher purpose, and by that I would like people to work with the to map their purpose to one or the other SDGs and use their skill built on articulation and expression to take it to the next level. Because I feel that the future, so long we were saying the future belongs to the entrepreneurs, but now I do feel that the future belongs to entrepreneurs who are also change makers, because now we are not just looking at profit-based business. There has to be a higher social purpose to the work we do, and there is also a kind of state of character as we are seeing around. It's not just enough to perform, it's also important to be a good person, like as a leader or as a businessman or a businesswoman. So I want to work with change making, where I can take people and their skills to the next level of coming back in touch with themselves, gaining their purpose and their strength, and thereafter converting that into a sense of it. Always does not have to be a change of job. It can really start from where they are, what they're doing, even as an individual, as a bystander, as a parent, as a fellow colleague. Can I stop you
for a moment? You have spoken for a few minutes. I don't quite understand what kind of business do you want to build? I can understand what are the different things that interest you, but you can't build a business like that. If you want to build a business, you have to choose a variety of different things. You have to make a variety of different decisions to position your offering to a particular customer segment that is willing to pay for what you have to offer and considers it of value, enough value that they would be willing to pay. You've talked about all kinds of things. You talked about teaching children. You've talked about helping people through their job transitions. You've talked about gender issues. You've talked about wellness. So it's a bit of a hodgepodge. I don't think you can build a business with that hodgepodge. You're going to need to pick something, and you have to pick a segment where you position your core offering. So tell me, what in all this, what is it that you're really good at? What is it that you think people are willing to pay for in what you have to offer?
I feel, I mean, you're very right. Thank you for that. On the focus point, I feel that I offer emotional sensitivity and emotional culture change, and through it comes everything else. So does that sound like an offering which can hold ground?
No, absolutely not. See, there are, let me try to frame it a little bit differently, and you can think about it. You don't have to answer, by the way, all these questions at this session. You're going to need to take it away and think about it. But I'll try to give you a bit of framework of how you can think about it. There is one type of business that you can do that is online education. So you could create online courses, and those online courses may be something that people may be willing to pay for, and you have to do a very thorough competitive analysis on what's out there and see if you can come up with something differentiated that there is need for, interest in paying for, and is not hyper competitive. So that's one possible framework. And then you have to figure out what within your scope of experience and expertise, and what is the market condition, where is the gap where you have expertise and domain knowledge. That's one framework you should use to work through all your ideas and see where there might be an opportunity. Another possibility is what you're describing generally falls in the bucket of life coaching or some sort of coaching. And there are tons of those. There are tons of life coaches out there for a variety of different types of problems, issues. You could position it for women, career transition, work-life balance, wellness. There's all sorts of things where you can do life coaching, and those are typically hourly payment kind of business models. That's another way you could monetize and commercialize your offering. So I don't see any other model. I mean, you can write, but writing is not really something that people will pay you for. Rather, in whatever it is that you decide to do, you're going to need to use your writing as content marketing. It is not something that is going to directly monetize for you, but it's going to help you market whatever it is that you decide to monetize. So that's
right.
Those are the feedback, those are the elements that I would have you think through and then come up with what is it that you really want to do.
Right.
Because right now it's kind of this, motherhood and apple pie kind of pitch, which is not going to monetize.
Right.
Does that make sense?
Yes, it does make a lot of sense. I totally see, that the need for focus, which is exactly where I'm kind of stumbling, because I am totally working and operating from more of a value system and a passion-based pursuit, but I'm exactly at that point where I know the world needs it, I know I can do it, I know, so the payment and the commodity part of it is exactly where I need to wrap it under a product kind. And you are very right, yes. Life coaching, I'm not too sure, because I'm not so much keen to serve individual leaders as much as I'm to serve, the corporate culture, which can benefit a large number of people. Of course, if a leader gets better as a person, it percolates to the rest of the company. But I don't see myself giving service to individuals or workplaces as much as I want to influence the corporate culture. So do you think there is a space of, work, like in online education and corporate, do you see there is an overlap somewhere there, especially now that the world is virtual?
A very, very crowded space called corporate culture change, is a whole domain in itself of human resource, and there are tons of companies who do that. It's a competitive space, so you have to do your research and understand the competitive space and figure out where you can position something that is interesting, is of value. The other thing that I will suggest you do is And maybe this is what's missing from your framework. You've done a lot of this and that. You've written, you've spoken, you've done your actuary work. You have an economics degree, but what you are missing is actually the framework of how to build a business. And that's something you need to learn. How to build a business is a whole domain in itself, and that's missing from your toolkit. So you will not succeed in building a business if you don't have the methodology of how to build a business.
Right.
Yeah?
Right, yes. And do you think this business is best, the way I look at it, since only the commercialized portion is missing, do you think it is a good idea to start with an MBM and do it the organic way, or do you suggest that I go back and actually do a very rigorous, I did a couple of, online courses, Coursera courses on social enterprises and, the models and the logic model, the business model. But do you think there is a need for doing much more of that, or do you think I should start with one product?
I have no idea what you've done. I have no idea what courses you've done. I have no idea what you've learned. But what I see is that whatever it is that you have studied has not produced a structured business plan yet.
Right.
So clearly there's methodology gap that you haven't yet been able to bridge to get to a structured business strategy or business plan. So I don't know what you've done, but I don't see the results. I don't see the impact of what you've done in what you're presenting here. It doesn't look like
Right.
you have learned how to present a business strategy.
So you suggest we do that first, or do I start with a basic MBM and take it organically?
Take it with a basic what? I think she's dropped off. All right, well, we'll take her Q&A later. Folks, those of you who are listening, as you can see, I give very candid feedback. I'm not going to tell you what you want to hear. I'm not here to give you a pat on the back that you're doing everything great. My job is to tell you what is going to help you move forward. Sinjini, just a second. We'll get back to Q&A in a moment, okay? So the question that we are discussing here of really understanding methodology of how to build a business, this is something we have cracked. In 1 million by 1 million, we know how to build businesses, and we know how to teach entrepreneurs what they need to learn to build businesses. So I will explain all that in the next segment of how to use 1 million by 1 million to learn how to build a business. So we'll come back to Sinjini, your Q&A, and anybody else's Q&A in just a moment. Let me just summarize how to use 1 million by 1 million to fill your methodology gaps. Everything resource-wise is at 1Mby1M.com. You will find a blog that is free to read, and it's full of case studies of how people have done it before you. We are huge believers in case studies. If you want to learn how online education entrepreneurs have built businesses, go study the case studies in online education that we have. We have tons of those. We also have the Entrepreneur Journeys book series, which is a series of 12 books under the Entrepreneur Journeys series title that focus on specific topics. Positioning is something that is missing. In Sinjini's presentation, what's missing is positioning. You need to learn positioning. There's no option of not learning positioning. You've got to learn positioning. You cannot build a successful business if you do not know how to position your company. So on and so forth. So you could also use the book series to learn. They're all available on Amazon as digital books. These roundtables happen every week. You're welcome to come back as many times as you want. You can pitch once at the free sessions. But they are also good learning material, and the recordings are good learning material. Our full acceleration program is 1M Premium, and there we offer extensive methodology, weekly coaching, consulting, strategy consulting, mentoring, whatever you call it, but this is the live feedback sessions, similar to what you're seeing here, but this is something you can come and use as many times as you want inside the premium program. We do have a terrific curriculum, which is like a very pragmatic mini MBA for entrepreneurship, technology entrepreneurship. If you're doing digital entrepreneurship, that is the scenario in which it's going to work. It's not going to work if you're trying to do something other than technology or technology-enabled services. So be aware of that. This is not a one-size-fits-all kind of program. We do help you with business development. We have a tremendous network. And as part of the premium program, you have access to that network as well. And we also help you with financing and media relations. Go to the self-assessment. And Sinjini, you should do this as well. On the website, on the 1M1M website, there is a self-assessment, which is a free tool, a set of questions that you need to ask yourself on how, what is your strategy and to what extent can you answer these questions. If you get stuck and if you cannot answer these questions, the best way to plug those methodology gaps is to go study the methodology in 1M Basic, which is our curriculum-only option, and that will help you very rapidly, very efficiently plug those methodology gaps. Let's say you spend a month, and let's say you spend 50 hours in a month studying the 1M Basic online curriculum. By the way, the curriculum is accessible to the premium program as well. The premium program gives you a lot more. Basic is a low-cost entry into 1M1M through just the curriculum. If you just spend 50 hours studying the core curriculum, you will learn a lot, and it's going to vastly improve your understanding of what you need to do. So go to the website, dig around, look at what to expect from premium, what to expect from basic, FAQs, video FAQs. A full description of the curriculum is available on the website. It is a case study-based program with over 1,000 successful entrepreneur case studies, including 100+ unicorns, 400+ venture-funded companies, another 400+ bootstrap companies. And that's who you learn from. You learn from other entrepreneurs, you learn from their journeys, you learn from the 1M methodology, which is something we have applied over and over again and have helped entrepreneurs over the last decade. Our methodology is lean, capital-efficient, bootstrap startups. The philosophy is bootstrap first, raise money later. And that's it. We have free roundtables every week. There are 4 more in July. That's Thursday morning, 8 a.m. Pacific time. We also have online rendezvous on LinkedIn Live, Facebook Live, and Twitter Live. Those are on Tuesday mornings, 8 a.m. Pacific time, and we have 4 more of those as well this month. And that's it. We can go back to Q&A. Sinjini, you can ask questions. Anybody else who would like to ask questions, let us know. You can dial in. You can put in your questions in the public chat. Whatever you like, I will pick up questions from the public chat as well. Go ahead.
So I will go back to study the business model a bit more, and let me see if I can come up with a structure to put to my work, and hopefully some other session again.
All right. Anybody else? Any other questions, comments? While you are thinking about your questions, let me introduce you to Irina Patterson. She will answer your questions about the 1M1M program. Her email is irina@1M1M.com. I don't see any other questions, so we will adjourn the session, and we'll see you back either at the rendezvous on Tuesday or at the roundtable on Thursday. Be safe, be careful. Things are quite precarious out there, so stay safe, take the right precautions, don't take unnecessary risks. Happy 4th of July to those who are in America and celebrate. Bye-bye.